everyone is well. A lot of things are reopening this exciting week. Actually, I'm really excited because things are getting open. Restaurants are opening. Business is starting again, which is good for, I think, for overall for everybody, as long as we keep ourselves, a social distance with each other. So hopefully there's no second wave. But anyways, welcome back to another episode of Remax Facebook Live interview, The Voices in Real Estate. This live interview will take place weekly for viewers in the real estate industry to learn and become better real estate agents. Within Remax, we believe in strength in numbers where people are open to share their experiences and knowledge with others so Remax agents and the rest of the industry can better serve their clients. So today's topic, this is a very interesting one because I'm going to be talking with an economist about key trends in different industries and also in the real estate industry itself. So our guest today is Rishi Sondhi, TD Economist. So let's get him on the screen here. Hey, how's it going?
Not too bad. How are you?
Good. Well, welcome. Thanks for coming on to the show here.
Glad to be on.
So actually, we got Carl saying good morning. Good morning, Carl from Port Alberni, and Ron also watching here. So yeah. So how have you been, Rishi?
Oh, I've been good. It's been an adjustment. Working from home, like I guess a lot of the office-based people are. So, managing life with my newborn baby, or I guess my infant baby. It's been very interesting. It's been very interesting. So
have you had a haircut yet?
Yeah, my wife gave me one, and if as you can tell, it's not bad. It's not bad, eh? Yeah, I know.
Yeah, my wife got me one too, actually today. Yeah.
Oh, that's good. I was wondering, yours looks pretty good too. So yeah, we were pleasantly surprised. Yeah. Before this, I didn't know what I look like. I look like a shaggy dog, I guess.
Awesome.
Yeah.
Well, let's maybe give yourself an introduction so that people know. We know you're a TD Economist, and maybe give yourself a little bit of background so people know better who you are.
Sure, I'll do that. So I've been in the industry, the forecasting and analysis industry, for about 15 years. I've worked for a whole bunch of organizations. I started my career with the Bank of Canada. I worked for CMHC for a while. I worked for this company called the Ontario Construction Secretariat. I also worked for Altus Group, which they have coverage of new home sales and the like. And I was also a forecaster for another major Canadian financial institution, which will remain nameless for now. And so now I'm here at TD. So it's I've been around, and with a big focus in the construction and the housing industries. And I think one of the unique things about my professional background is that I've analyzed markets from a supply and a demand perspective. So it's in terms of construction versus sales and listings, that sort of thing. So I feel like I'm a little bit well rounded from that end. So
awesome.
So that's kind of me.
Okay, awesome. Well, let's kind of jump right into it here. And so, I mean, this whole COVID took place about, for at least in Canada around March, early mid-March-ish. So how have that affected different industries across, I guess, Western Canada or Canada?
Yeah, I mean, that's a good question. I mean, before I get into there's been a broad slate of negative impacts on industries, as we know, right? But not every industry has suffered. Some have actually done well. So it's worth pointing that out. The grocery stores, food manufacturing, streaming services, Walmart's done well, Amazon has done well. So there's been some industries, some pockets that have done well here and there, but disproportionately the impacts have been bad. Those industries that are kind of high touch in-person industries have done really bad. So like your retail trade. For example, travel services has been really bad. Your recreational industries like your spectator sports, galleries, museums, they've had to be closed because there's large gatherings that tend to take place there. Your other services like your hairstylists, your barbershops, hence our hairdos. They've had to have been shuttered as well. So there's been lots of industries that experience closures. The educational sector, schools are shut down. So teachers really haven't lost their jobs. It was more like early childhood educators, teachers' assistants, that sort of thing. Daycares are shut down, so daycare jobs have been lost. I guess one thing that could surprise people is that municipal governments have been suffering too. And if you think about it, it makes sense. Their revenue base has kind of been eroded. Some municipalities are deferring property taxes. Land transfer taxes, of course, gone down because of real estate transactions. User fees have gone down, so public transit ridership is down a lot. So the municipal governments are suffering, so they've had to lay off some people. And of course, the biggie is the oil and gas industry. Of course, I wouldn't say that it's been impacted so much by social distancing per se. It's more because there's been a collapse in a global collapse in oil demand, which has pushed oil prices down and caused production shut-ins and capital spending budgets to be slashed and the like. So that's kind of a lay of the land with respect to the industries. If you'll permit me to continue to talk, it provides a nice. Yes, I love to hear myself speak. It provides a nice a segue onto our expectations for the provinces with respect to just economic growth.
Yeah.
This year, we expect every province to be in a recession, right? I mean, the recession has already hit us, so that's unavoidable. But there's some provinces that'll do better than others, or I guess perform less bad than others. So starting with the ones that we think they'll perform the worst, really the provinces that are levered to the oil and gas industry are probably going to do the worst this year, and that includes Alberta, Saskatchewan, and Newfoundland and Labrador. That's because they have the pandemic and the collapsing oil prices. There has been some positive news on the oil price front. I mean, oil prices have gone up to $30 a barrel, roughly, from being negative about a month ago. So that's positive. And in Alberta's case, I mean, they have some pretty robust government spending plans that have been announced, so that'll be helpful. But overall, not enough to really offset. So there's going to be a big contraction in Alberta. Saskatchewan will probably fare a little bit better because their economy is a little bit more diversified. Now, in terms of the other provinces, it really just depends on their COVID-19 experiences, right? So. Outside of the oil-producing provinces, we expect Quebec and Ontario to contract the most because they have the worst COVID-19 curves. Manitoba won't do as bad because its COVID-19 curve is better, although its recovery is complicated by the fact that it depends a lot on Alberta and Saskatchewan for trade. So because they're doing so bad, that'll weigh on Manitoba. Also, they don't have this. They had these large-scale construction projects that were boosting activity in that province. They've run their course. They won't have that same level of support. On the opposite end, you have the Atlantic provinces, which have relatively mild COVID-19 outbreaks. I'll say still serious, but milder. So they should probably outperform. And of course, we end with BC. BC should actually, it's BC will be in a recession this year, of course, but we're actually a little bit more optimistic on BC than some of the other provinces, and that's because there's lots of government spending. There's that large scale, the LNG Canada project, which is boosting activity in BC. We do expect the real estate sector to post a gradual recovery moving forward. So that'll help BC because it has an outsized real estate industry, and its COVID-19 trajectory is pretty good. I think they're in phase 2 of their. The reopening right now. So that means phase 1 went well, right? So they're reopening more sections of their economy as we speak. So we're actually relatively less bearish on BC as we are. So that's good news for people in Kelowna and Vancouver and the like.
Awesome. Well, this whole COVID thing is actually very interesting because a lot of people are like, well, you mentioned the word recession there, but it's very different than a financial or economic recession because this is more of a health situation. So it kind of boom hit us like a bang, right? It's not like you forecast everything and then it slows down and things go bad, right? It's just kind of hit us in your face kind of deal, right?
Definitely.
But and it hasn't. I mean, the last pandemic that happened that really suffered a lot. Made significant impact all over the world. It's probably 100 years ago, like the Spanish flu. But we have no data of how to recover. What happened, what took place 100 years ago and now. So, and seemingly, I guess for many provinces, it seems to be. And we look at some of the transactions too. Especially now things are reopening, it's getting a little bit better. But I want to see what your take in terms of that real estate specific. What do you see? And actually, let's maybe even take a look at what took place and then what your thoughts are in real estate specifically.
Sure. Well, I think you nailed the nail on the head. When you were talking about how the speed at which the pandemic hit us, right? So it was just a rapid fire thing. So we've seen rapid fire responses as a result, right? So basically, what the pandemic did is it put real estate markets in a deep freeze, as I'm sure everybody listening knows. Buyers and sellers moved to the sidelines en masse. Across Canada, sales were down 60% from their February levels, so February being the pre-pandemic month. Through April. Listings were also down 60%. So not only has not only buyers moved sidelines, sellers have moved to the sidelines as well, and that's actually kept markets in balanced territory, which is important for prices. So I guess the preliminary data that we have for May, when we look at across various markets, it points to sort of a tentative recovery going on in buying activity. At least in Toronto, sellers are still kind of reticent to list their properties. So at least in May so far, buyers have sort of come off the sidelines more than sellers have. But both buying and selling activity seems to be tentatively recovering as we sort of move through May. So that's an important point there. Now, in terms of average prices, what we've seen across Canada is we've seen a double-digit drop in average prices across Canada since February, right? But that's really been concentrated in two provinces. One has been Alberta, and one has been Ontario. So Alberta is, you'd probably expect that given the oil price shock that prices would go down, right? I guess the more surprising one from our perspective, which was prices came in a little bit weaker than what we forecast, was in Ontario. So Ontario prices have gone down 16% since February, and that's actually the most in the country, right? So this is a massive drop, right? So, but bear in mind that a big chunk of that is like what I'll call compositional effect. So there's really less transactions going on sort of the top end of the market, and these are average prices that we're talking about. So when you have less transactions of expensive homes, the average price tends to get hit. So that doesn't mean that sales volumes have done any worse than any other jurisdiction, right? It's just that some of the stuff that we have seen move in Ontario and Toronto specifically has been more sort of on the lower end price range. So there is demand going on there anyways. So that's one consideration. Another consideration is that the level of transactions is so historically depressed that the price signals that we're getting are pretty distorted anyways. So I can't, it's tough to kind of draw trend or draw conclusions about broader market trends just from a handful of transactions that are going on right now, right? So when you look at some of the other provinces, like Manitoba's actually had prices go up since February, right? So Saskatchewan's flat, Quebec flat, BC flat-ish, right? So it's the fact that supplies come off just like demand in all these provinces has really helped put a floor on these prices outside of Alberta and Ontario.
Right. How do you think that it's going to recover? Like, how long do you think will recover for most markets?
Yeah.
Every market's very different, like depending on
Sure.
what, different industries. So what are your thoughts in terms of how things will actually, assuming there's no second wave?
Right.
That's a different story altogether. We
Right.
can't make judgments on things we don't know, but assuming
Sure.
there's no second wave, when do you think markets will be going back to normal in different provinces?
Sure. So well, I'll start with across Canada. So across Canada, we expect sales to return to their pre-pandemic level sometime in the first quarter of next year, probably later on in the first quarter, maybe March, something like that. So it's going to be a really gradual recovery, and sales levels are going to be depressed for probably most of the year this year, right? So that's kind of what we're thinking. I mean, the oil producing provinces we think will do worse because their economies are going to do worse. The Atlantic provinces will probably do better because their economies are going to do better. Manitoba will be kind of somewhere in the middle. Ontario and Quebec will probably do a little bit worse, again, because their economies are doing a little bit worse. So that's kind of where we see, from a sales perspective. So why do we, it begs the question, like, why do we even expect sales to recover? Well, it's consistent with what we expect for employment. We do expect employment, job growth to kind of gradually sort of pick up as we move forward. One important thing to remember is that equity markets, stock markets went down a lot, right? So they're gradually recovering. And of course, as we know, personal savings are an important source of down payments for first-time home buyers, right? So they really depend on personal wealth to make that down payment, right? So the fact that stock markets have gone up is sort of a good thing. When you look at the job losses that we've seen across Canada, a lot of them have been concentrated in what I'll call sort of the lower or below average wage industries like your accommodation, your food services, retail, trade.
Retail. Yeah.
Yeah, probably a lot of these people that lost their jobs, like almost certainly a lot of these people that lost their jobs are not homeowners to begin with. They're not in the ownership housing market, right? So even though we've seen historic job losses, it's probably skewed, if anything, more towards renters than homeowners. So I mean, that's another factor that kind of takes some of the sting out of the job numbers that we see. So all these factors kind of point to a recovery. Not only that, but when you look at other jurisdictions like China and South Korea, they're a little bit further along in their COVID-19 curves. We've seen sales come back reasonably strong, in a reasonably strong manner so far. So that kind of gives us some confidence that sales will recover in a gradual manner.
Right. Actually, you
Now,
mentioned.
you know,
Yeah. Go ahead. Sorry.
oh, I'm sorry. That's only sales. There's also listings and pricings listings and price that I could talk about as well. So listings we think will follow sales broadly. So that'll leave markets roughly balanced. That doesn't mean we think listings will follow the trend in sales one for one. We do expect the gap between listing and sales to grow, and that's because we just think that the economic pressures will force some people to list their properties, particularly those that might be over levered. Maybe some investors, they bought more than one property, or the case may be, they might have to list their property. So that's consideration there. But by and large, we expect market conditions to be balanced through the pandemic because, again, we expect supply to roughly follow demand, and that'll help put a floor on prices, as I mentioned before, and allow positive, very muted but positive price growth to resume in the third quarter, and forward.
I see. And you mentioned previously, tenants, rentals. How do you think that this COVID will affect in terms of, I guess, rent prices and things like that? And would that make a significant impact then?
No, definitely. It's already kind of showing up. I mean, rents are declining in major markets, right? And that makes sense because at least if you look at a place like Toronto, and this is true for markets in general, right? There was a lot of multi-unit construction that was going on, like record multi-unit units under construction, right? So a lot of those units have completed, and they were slated to hit the long-term rental market, right? So that's that supply there, right? And also purpose-built rental construction has been trending up. I know Vancouver's had a real concerted push to get purpose-built construction on the market, right? So
Right.
you have a lot of rental supply hitting the market right now, which is kind of a bit of a bad news story, right? In the environment that we had that we're in, because as I mentioned before, the job losses have been disproportionately skewed towards the renting. The renting cohort, right? So you have really weak demand, you have supply coming on, right? So in this environment, of course, rents are going down. The big wild card here is population growth. It'll likely be a lot slower than what the federal government hopes. And of course, as we know, when immigrants and students and the like come to Canada, first thing they do is rent. So that's going to be a big blow to population growth. So that's not great news for rent. Yeah, so I mean, carrying cost, if you're an investor or whatever, and your carrying costs are going to be that much tougher because your rents are going to be going down, right? So it's a tough environment too. I mean, there's some stories that renters or I guess owner investors are even scared to rent their properties out to people because you can't really there's no tenant evictions or anything like that, so you have to keep that person.
No.
Yeah, so you have to keep that person in the unit for an extended period of time, even though they may not be able to pay rent, right? So there may be some losses there. So it's a pretty bleak outlook, I'd say, for the rental market. Currently. That said, I do think that the second half will be a little bit better for the rental market than the first half because job growth is going to pick up a little bit, but it still won't be anywhere near as hot as it was, at least in Toronto and Vancouver, as it was just a few years ago.
So can you say that this is more like a freeze in terms of growth then for developments and rentals and all that stuff, rather than this is going to have a permanent damage in terms of growth ultimately? Will it be a complete stop for a long time, or just a temporary pause on growth, right?
I think it'll be pretty long lasting. I don't think it'll be a complete stop. I mean, even during the pandemic, transactions were still 40, hovering at 30 or 40%, right? So even during the worst of the pandemic, people were still getting out and buying and selling properties, aided by virtual tours and the like. But so I don't think it'll be a complete stop in the rental market, but I do foresee a real gradual recovery, and it's really really a function of the population growth. Like population growth, I think is going to be really subdued moving forward. So the rental demand is just not going to be there, right? So it's really hard to kind of be optimistic about the sector when we have those negatives.
Right. Awesome. No, well, great insights. So we're down to 20 minutes now. So I'm going to ask the question, what is your Remax hustle tip? It doesn't have to be economic point of view, but it could be just a Rishi Remax hustle tip for everybody here. What would yours be?
Well, I have to think about that. I mean, it's. I don't think I have any personal tips for you. I mean, it's been an adjustment. I think I don't have any tips. I think it's been an adjustment, and I'm struggling just like everybody else. So my tip is that keep the faith. That's my tip. But no. I guess a couple things I'd want to mention just on the outlook front for people is to watch. Q3 and Q4 could be particularly sensitive time for real estate, not just because the risk of a second wave of the pandemic, but also because that's when the mortgage deferral programs run out, and I think that's a serious risk for home prices. So Q3 and Q4 are seriously the periods to watch. So that's kind of what I'd note.
So how many people actually took the deferral then?
Yeah, 700,000, over 700,000, right? Which is like 10 to 12% of mortgages outstanding. So it's the flip side of that, of course, is that 90% of people haven't, but that's still a pretty big chunk, right? And even if a share of those people, they have to list their properties because the mortgage is in arrears or whatever, and they can't pay their properties because their jobs, they don't get their jobs back. That's still gonna put downward pressure on prices, and could potentially even lead to price declines next year. So we'll have to see how it goes. Yeah, but that's a pretty big risk.
That is, and actually we've been a lot of our agents, we try to explain to their client, or agents trying to explain to their client that this is a deferral, right? Only take it, 2 months ago, only take it if you have to, because you still have to pay it back. Because there's people with different mindsets, especially for the younger generation. They know what a deferral is, but they see it as, well, I can just pay later and don't worry about it now, right? Even though they may not have needed it, they can cut some personal spending, things like that, which we always encourage, right? Cut your own spendings before you take more debt for yourself. But that's the message we've been getting, and hopefully, a lot of them get that message and don't take it. But I'm sure there's a lot of people that they may not have needed it, but they took it anyways, right? And those are the ones that that's a little bit more worrisome, because they would be spending the money that they saved on the deferral on elsewhere that probably isn't necessary, right? So hopefully, as a part of the industry, banking industry, and us, we always have to, make sure we tell our clients or customers, what is actually best for them, right? Because we're the professionals, they're not, right? So it's our job to kind of help counsel them. One question for you.
Sure.
Just one.
Sure.
Is everything gonna be okay?
Yes.
Well, let's
Don't
just
worry
make
about
months down the road.
Every little thing will be all right.
Everything will be all right. Well, as long and even from this conversation alone, I mean, you look at looking ahead, as long as there's no second wave coming, things in time will gradually be back to, economy-wise, will back to be normal. However, the way we do business may be very different now, because there's just going to be a lot more online stuff and checklists before meeting and things like that. But it's going to be a new norm. But I personally think months from now, things will be okay, right?
Yeah, I mean, one thing I'll say is that we had the Spanish flu, and 100 years ago, and life went on after that. So we have that historical precedent. And I think you're right. I think things will move on. And I think there's definitely going to be changes. I'm not sure how what the future for open houses will be. I think people may be a little bit more choosy with the houses they do visit when they're going to buy, right? So it's not like you spend a Saturday looking at 6 houses. You look at 2 or whatever it is, right? So
Right.
yeah, there'll definitely be changes, but we'll move past this. But the timing might be uncertain. There might be a lot of uncertainty and a lot of risks out there, and certainly there are. And our forecasts are subject to a lot of uncertainty. I have to underscore that. I was a little bit flippant before, but there's a significant amount of uncertainty on it. Nobody truly knows what's going to happen. Even the Bank of Canada didn't do a forecast in their latest opportunity to do so. There's lots of uncertainty there, but I think we'll pull through ultimately.
Awesome. Well, thank you for all these good tips and knowledge and stats and everything. Appreciate your
Thank you.
time.
No
Okay.
problem.
All right. Bye, everybody.
Bye-bye.